Hey everyone, this is Matt with the Fundamental Investing Institute. Thank you for tuning in today. We're going to make another video on the topic of SMB acquisition, and today we're going to focus on another financial term that comes up a lot in that world, and that is the concept of Seller Discretionary Earnings, or that's also known as SDE. We hear that a lot. I listen to some of the podcasts and stuff, and we hear that term kind of thrown out. So what does it mean? Well, basically, again, it stands for Seller Discretionary Earnings, and it's also sometimes known as owner benefit. So those two terms are really kind of used interchangeably to refer to the same thing. And it's basically the total pre-tax income and all the other benefits that accrue to the owner. So usually brokers and bankers, anyone working with this, will calculate it as follows. They'll usually start with pre-tax income. That usually is taken off of the tax return. They'll add back any financing costs, so basically interest expense that the company may incur. Then they add back the owner's salary, any other benefits such as health insurance that the owner is taking out. And then if the owner is taking out any personal expenses, which they may sometimes do, they're going to add that back as well. Now, we often see the purchase price referenced as a multiple of SDE. So for example, if you've got a company with $400,000 in SDE and it sells for $1 million, you often hear that quoted as the selling price being 2.5 times SDE. So just to get everyone familiar with a lot of the terminology. Now, the takeaway on this video that I want to leave everybody with is SDE is not true corporate cash flow. It's not true business cash flow. And the primary flaw is that SDE ignores the cost of the owner's involvement. So it's not, it's not indicative of what, say, a passive owner would earn if they just bought the business as an investment. So we were going to leave that where it is today, and we'll talk more on other financial concepts. What I want to do is I want to move our way up to better definitions of cash flow that we can work with in our due diligence and in managing the company. So thank you for tuning in today. We'll see you next time.